Well, President Trump himself acknowledged on Wednesday that tariffs may lead to higher prices. He nonetheless downplayed the issue and said consumers will just, in effect, have to buy less stuff.
Maybe the children will have $2 instead of $30, and maybe the $2 will cost a couple of bucks more than they would normally. But we're not talking about something that we have to go out of our way.
Notable. That was not in his campaign. It echoes what the Treasury Secretary, Scott Bessent, told the Economic Club in New York in March. He said, quote, access to cheap goods is not the essence of the American dream. All this despite, you'll remember, Trump campaigned very much on lower prices. Robert J. Gordon is a professor at Northwestern University. He is the author of The Rise and Fall of American Growth, which explores living standards in the U.S. going back to the Civil War. Thanks so much, Professor Gordon, for joining us.
Glad to be here.
So when you look at the indicators, and you've looked at the history of where those indicators tend to lead, you've got fast food companies saying we're selling less. You have small businesses telling the U.S. Chamber of Commerce they're being hurt, perhaps irreparably. You had an economic contraction in the first quarter. You have basically shipping about to drop off a cliff in the coming weeks. What does that point to from your perspective?
Well, let me tell you that President Trump says that our trade deficit is a sign that we're losers, but actually it's a sign of our enormous success. And here's the logic. For every dollar that we spend going out, some other dollar has to come in. The accounts have to balance. And the dollars that come in two different ways. One is the strength of the dollar. The dollar is the world's reserve currency. So a lot of those dollars coming in are foreign countries holding their reserves in dollars. But the real sign of our success is that those foreigners are attracted by our stock market. Our stock market is worth double our GDP. In Europe, the stock market's only worth 50% of GDP. So this money flows in as a result of the fact of the tremendous success of the US economy in inventing the three biggest inventions of the last 50 years. Personal computer software, search engines, make it four things, e-commerce, and the smartphone. Those four inventions are totally dominated by American companies. Those are part of the Magnificent Seven that makes our stock market so valuable and attracts money from abroad. To stop having a trade deficit, from that standpoint, we would have to kill our stock market, which was partly evident in early April, and we would have to have a collapsing dollar, which would reduce American standard of living. So that's just one way of looking at it.
Trump's goal, as he describes it, as Howard Lutnick describes it, is to bring manufacturing back here. All sorts of manufacturing, not just at the high end, but putting the screws in the backs of your iPhones, et cetera. Is that possible in today's global economy? And would it make things more expensive?
Well, of course, it'll make things more expensive. But let me just give you a simple example. We now have 13 million manufacturing workers, which is about 8% of total employment. Let's say that by some miracle, all of this raises manufacturing employment by 1 million. Okay, now we have a 4% unemployment rate. These people are not unemployed. The effect would be certain people would get jobs in manufacturing instead of having jobs maybe at McDonald's. Let's say each of those people getting a manufacturing job makes $20,000 more than they're now making. Okay, that's $30 or $40 billion a year. Compare that with the effect of 20% tariffs. Imports are 4 trillion, 20% of that is 800 billion. The hurt to consumers from all this is something like 15 to 20 times any conceivable benefit in raised wages for those few people who would get manufacturing jobs. It's just too small to matter compared to the enormity of the American consumer market.
This is the President of the United States who is, I don't think it's an exaggeration to say, obsessed with trade deficits as, in his view, being fundamentally theft, right? That the U.S. is losing those deals. In the simplest terms, based on the data, does President Trump not understand economics?
Absolutely not. He does not understand it. And I'll tell you another way of thinking about it. Besides all the successful companies and the foreigners wanting to invest in our stock market, Another thing that we teach in basic economics is that our trade deficit, by definition, has to equal the difference between our national saving, that's how much private people save and how much the government saves, and our total investment. So we save less than we invest, so we have a trade deficit by definition. Now, what would it take for us to save more? Well, private people could save more, but the real change would be if the government stops running a deficit. So the biggest thing that Trump could do to avoid having a trade deficit would be to kill this tax cut. Raise taxes instead of cutting taxes. There is no faster way to reduce the trade deficit than to reduce the government deficit. Those some so-called twin deficits go together like Tweedledee-Dum and Tweedledee-Dee. And Trump, by trying to cut taxes, is just going to make the trade deficit worse, not better.
Professor Robert J. Gordon, thanks so much for the economics lesson.